Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go AskSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the AskSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market continued its upsurge last week, exploding upward on Friday. It's seemingly in a landscape that might have been only dreamed up by a writer of a futuristic movie. The stage is set with images of civil unrest not seen in decades after the murder of George Floyd by police, now ex-police, tipped the anger of the people. That brought looting and burning and mayhem and distractions to such an important message that the good people are trying to bring with their peaceful demonstrations. There's a raging virus only let get worse through the disregard of personal distancing, and it getting worse and worse in a lot of other countries out throughout the world. An unemployment rate that, well, it's worse than the Great Recession, now improved at 13.3%, and what I believe is a very, very flawed report, with the math seemingly not supporting that at all, and apocalyptic in some ways, with the likelihood of massive amount of bankruptcies already surging out there, with predictions of 10 to 15% of small business being gone in the next year, 25% of restaurants. And then there's the men and women in the steel glass towers, dressed in their suits, overlooking the chaos, confident in their takeover of the financial markets, and how that will make things better for the people as they wave their magic financial wand and stocks surge, which over the decades has only sown the economic disparities that are part of the strife contaminating our world now. And the more the printed fairy dust, the more havoc destined for later. Of course, in this movie, eventually the good people will climb the stairs. They'll get higher, they'll get things done, and the protagonists will get those villains. And we know that the world would be better without them. In the meantime, the Fed and world central banks will remain the greatest influence on the financial markets, as massive stimulus, historic amount of money, finds its way into the next asset inflation, with most of the people that they intend to help missing the benefits of it. And despite the growing economic inequality, they'll get away with it until enough is enough and markets punish them. Well, that's how I would write the script. Now, maybe it's starting as the bond market gets hit very hard this week and interest rates pop up very strongly. And eventually, there'll be nobody left to buy that counterfeit paper, as rates then explode, as they have to try to sell that. Well, right now, we're going to look at markets that have passed important resistance in our analysis, and the word bear has to be suspended out of our vernacular. Well, I say suspended. Our analysis does show now that they've gotten through key levels that they have bought time. While we're not going to say bear anymore right now, we're going to replace it with correction, because nothing has changed in that regard, as we still look for some serious pullback here into the summer, and our analysis has continued to show that, though from higher levels, as we see. And then after that big pullback, we probably get some more of this through the election on the upside. But then we say, look out, 2021. Stocks for the week, well, the broad indexes, the S&P 500 up about 4%, the Dow about 5%, NASDAQ laggard by a bit, up about 3% on the week, as the stay-at-home stocks that had done so well now become a source of funds, but still gaining ground as this big rotation comes on. And we see these beaten up stocks like airlines flying on the upside. And the Russell, the home of the zombie stocks, zombie companies, gains about 8% on the week. Bonds, a big crack, 30 years down well over 6 points. The 10-year yields explode upward 28 basis points. We look at this as a sign that there is something changing in here. The bond market hits our downside targets, which we had essentially had given up on, and the yield curve does get steeper. Gold market, well, no reason for a flight to safety. That's why bonds crack also, and the gold falls over $65 on the week. A big $1 loss in the silver market. The dollar loses about 1.6%. Again, no need for a safety bid, and the massive amount of printing is bringing in weakness in the dollar. And also the oil market gained strongly 4%, as there is a big day coming up for the oil market on Saturday, because OPEC then does meet. I want to make sure that you go to AskSlim.com, become a free member or become a member. Subscribe to the YouTube channel. If you are watching this on YouTube, click that little bell so you get notifications when we put out clips. Make sure you give it a thumbs up if you like the video. And follow us on Twitter at AskSlim. You have questions about AskSlim.com, about the membership info, then all you have to do is write to Matt at AskSlim.com, and he will share with you everything that you need to know about the very, very broad content that we have here at AskSlim. 4 different membership levels for all styles of traders and investors. Please do write to Matt for information and go to AskSlim.com. All right, so we're going to do things a little differently today. We're going to look at some trader education, at momentum studies. It's about riding the big impulses to the upside. As I say, we're in a world of markets that exhibit historic swings. As traders and investors, we must adapt. We have to be flexible. Always have to look at what variations of tools do we need to use that are best for our technical analysis based on the existing conditions. I have been a trader now for 46 years, became a CBOE member back in 1974. So I have seen a massive amount of changes in the markets and always needing to adapt as that happens. Over the last many, many years now, momentum has really been king, especially for traders, swing traders, those wanting to catch the big swings in the market. And as I speak to my traders, my clients, and in my videos, I always say that the biggest success comes from positioning ourselves with the momentum, not fading it, not standing in front of that moving train. We must catch those and ride those big impulses to have bigger wins versus losses and more wins versus losses. That's the key to success. So I'm going to show you 2 indicators that I think will help you with that. We'll do this quickly, so just so you can get a sense for what this means. I'll look at a few symbols and you'll get a good sense. 2 momentum indicators that we're going to look at right now. This is the S&P 500, and we're looking at momentum breakout bands. They're called MOBO bands, and these are fantastic indicators of momentum. So when you look here at the S&P 500, you can see, as we're looking back here 6 months, of course, we had an up move going up here last year, and then through the early part of 2020, they had some wiggles and some topping in here, and then when it turned down, you can see what happened. Now, what is a MOBO breakout band or momentum breakout band? This is essentially a sister or a cousin to a Bollinger Band. Bollinger Band is a band that widens and narrows based on volatility, and it has a center line and 2 standard deviations in either direction. Momentum bands essentially take 8/10 of a standard deviation. So when you see it red like this, it's trading below the bottom band in a much narrowed Bollinger Band essentially. When it's trading like this, it's trading on or above that band in that Bollinger Band. So it's 8/10 of a standard deviation in either direction, up or down. So you can see the value of this when you look at momentum. It's incredibly powerful that it gets you on the right side and you don't make as many mistakes and you can catch the big ride. Let's just look at one more stock, Apple, and I'll show you that one. And you will see a similar story as you look at that. Of course, Apple's a market stock and heavyweight in the indexes, so this would look a lot like the S&P 500. Now, I want to change this up a little bit because this is a fantastic indicator, but it's not my favorite. My favorite is the one that I developed called the Slim Ribbon. So I'm going to go back to the S&P 500 for a second, and I'm going to go into studies right over here, and I'm going to edit studies. And instead of using the mobile breakout band, which I'm going to get rid of right there, I'm going to change this to the Slim Ribbon right over here, and I'm going to add that to the chart. Now, this has got some great programming in it. First of all, you can see that it colors the bars, similar to what you see in the mobile breakout bands. It then gives you these signals as to when the momentum is positive or neutral or turns negative. The widening of the band is a signal of momentum increasing, and you can see that going on right over here as it was negative and had the big crush. You would have been told to be on the short side or not to be on the long side at 3,200, and you would have been on the right side for 1,000 points. Here's where it turned positive here as the bands got very wide and then turned upward, and you can see in here it remained positive the entire way. All the way up to where it is now. So this would have been about a 700 point advance, 600 something point advance that you would have been on the right side of. Now, I'm a cycle analyst, but I'm not looking at that at all because what I want to discuss is the importance of momentum and how you can improve your trading and investing. So what I want to do is just change this up a little bit because, I think that there's even a better way to see this that is far more stark. And again, we have programming in here that is showing you when it's positive. I'm going to go into style and I'm going to change this to an area chart. And then you can see how this plainly screams at you. When to be on the long side and that be your bias, when to be on the short side and that be your bias. So it looks pretty clear in here. You could take a look at Apple. As I switch this over, let me just go to Apple, and you'll see a similar thing right in here. Of course, Apple does look like the market. But what I want to do now is I want to change it up a little bit and let you see a few other things. Let's just look at a commodity. Let's say oil, which has been very volatile. Here is /CL. Could you be given a clearer picture? You can just see that. It did go neutral for a little bit right over here as it had a rebound, and then all of a sudden went negative again. It would have kept you out of trouble or in the profit all the way down, and then when it turned positive here, up at around 25, well, all the way up near here to 39. So just a beautiful picture there when you look at the Slim Ribbon on an area chart. Let's take a look also and take a look at a few more stocks in here. Take a look at Boeing. Now, Boeing is one, of course, that's had a horrible time. And you can see that way back over here, while the market was still okay, when Boeing had its own troubles with the 737 MAX, well, it began to move lower. It had a little bit of a rebound period right over here, and then remained negative until right over here, right around 142, 145. And now here it is right now today, up $30 at $213. So a very, very good picture of how you can get on the right side of momentum. One more thing in here, or two more. Let's just look at a couple ETFs. We know that the XLE, the energy, has been in a lot of trouble, but look at that. And the clarity of when to be long and when to be short. Again, this is controlling your biases, taking the big ride. These are daily charts we're looking at, but it looks also Works also on weekly, on monthly, on intraday. Just a really good look. Note that intraday will be more volatile. There'll be a lot more wiggles in there. A lot smoother when you look at daily, weekly, and monthly. How about XLF? The XLF, they were a laggard. You see, they actually got bearish again right in here, but then as it turned up, the slim ribbon began to widen. It then turned positive again. Look what happened right over here when it turned negative, and you got the whole ride on the downside. So you can see in there how clear that is when you look at momentum studies. If you want to have the slim ribbon on your website, on your platform, well, we have this programming you saw is for the Thinkorswim platform. You can go to AskSlim.com to the resources, and you can then put up the slim ribbon. There's a video there. You can watch that. And if you're not on Thinkorswim, it shows you really how to construct it, but you won't have the programming. You'll really just have the 3 moving averages in there. That'll still be helpful to you. I think that's a fantastic thing for you to be looking at, and to help your trading in any kind of market, and especially these amazing momentum markets that we are in right now. That is a look at traders education, and I hope that it's helpful to you going forward, and you use momentum studies to really raise your odds of success. So now we're going to switch over. Let's take a look at the short-term view of the 5 major markets. We're going to look at the light crude market, the gold market, the dollar, the bond market, and the S&P 500. We're only going to get about 50% in here for the week. The markets did act fairly differently than we thought. We got the dollar really right. The bond market, we thought it would have a minor upward bias, and that didn't happen at all. We thought the stock market would be moving up for a couple more weeks before it then had a big decline, and it did move up. And the gold market is definitely weaker than we thought it would be. Light crude, well, that broke out of the range on the upside. So the best I can rate myself is 45 to 50% for the week. Let's take a look now as we jump in and look at, well, that's XLF that we were just looking at. So let's switch over and look at /CL once more. Remember, we just showed you momentum on the upside, and there's the slim ribbon showing you that right now. Note in here the cycle pattern. What we thought was that it would rally, and it would rally for a couple of weeks and then turn down. Well, that was pretty right. See this swamped right over here. This cycle gave you no decline whatsoever, and that is still quite strong when we look at that. Now, the market is moving up today because there is supposedly going to be good news on Saturday when OPEC has a meeting. There's a lot of possibility that they will extend it, but they're really, some of them, Russia, Saudis, very angry at the cheaters out there. So there might be some pretty tough restrictions. This news might not be as great as they're looking at. So what we're looking at is a failure that comes in this weekly. This is from the weekly chart, this resistance zone. So this was at about 38.30 here. So we're looking at potentially getting up only to about 39.80 to around 41.75 that we have right here. So you can see we're thinking it goes up a little bit more, but then starts to come down. And it can come down pretty hard. Some of the evidence says that it's very big resistance. Even though momentum is strong now, we are looking for it to begin to roll over from this level and then have a corrective period going forward. So that is a look at light crude. Now we're going to look at the gold market. Now, I'm getting a lot of emails on gold right now, and gold did have a huge break here, and that decline got it right down here to that support level. Now, getting down to this support is a bad thing, actually, even though it's barely holding there right now, and we see that there's a potential rally coming in the next couple of weeks in this projection. Getting here is not a good thing because that raises the odds of the longer term patterns pushing out into early July before we resume on the upside. So what we're going to look in the next 2 weeks is a rally over the next 2 weeks and then turning down again. So if they don't break down here, there's some possibility they would break down over here later in around the third week of June. So for the next 2 weeks, we'll look for a bottom being made in here and then a rally, but then moving down again in another failure. We're going to probably test these supports right over here at 1670, 1655. And we've already tested that 1670 level right over there. And then we'll get potentially a rally up here, maybe about halfway back. We didn't put the resistances in here because I don't have a low in here yet, but it's probably around 1740-ish or so that we think we'll get up to and then be coming down again. This has all been a consolidation period in here, and it's giving indications that it still could extend for a greater period of time. Some of the evidence is the correction in the intermediate is extending, and we see the risk into early July. Some damage to patterns has been done by coming down to this level, but still the long-term and intermediate-term patterns are positive, and we still think that the risk rewards for the intermediate and longer term favor the upside. For now, also momentum turned down in here, as you can see, which is also not a good sign for it, as momentum had been strong for a while. All right, so now we're going to look at the dollar. Now, we talked for the last several weeks, or at least the last couple weeks, about the worsening pattern here in the dollar, and that has continued to worsen right now. As we had this big downside breaking what we call is the VTL, the Vela trend line, breaking the support of the moving average. The momentum now turning negative, as you can see. Remember what we said about momentum. This was a choppy period in here. There was no momentum. You could not get a read at all in there. But now you're starting to get it, and it's negative. We're going to look for a rally in the next 2 to 3 weeks where it gets up here. It's maybe less than that, maybe 1.5 weeks, and then moving down again. This failure, in my opinion, is highly likely after it tries to rally. It might try to get up to around 98 and then move down again. So that is a look at the dollar. The next one we're going to look at is the bond market. Now, the bond market annoys me. It's annoyed me because it really looked to me like there was going to be a pretty sizable break, and I was short the bond market all through this period in here because it seemed like it was the right setup for it. This testing this level here, and then it broke this level right over here, which was key to me. And then it wouldn't go down. Finally, I gave up on it, and it just collapsed in here. So interest rates, as I said, popping, the bond market breaking in a pretty significant way. What that says to me is that, well, based on this cycles, which is late, and this ghost cycle here, which is about on time, that was an older cycle in there, there should be a low in here, an attempted rally. But much like we see in the dollar, we believe that it will fail in there and potentially set up something better for later on. The intermediate patterns, so the sum of the evidence, they're still okay. There's only minor damage to that. We might see a recovery in the bond market from whatever levels we get here out into the summertime. We think that's a pretty good possibility, but then overall for the longer term, we may be seeing a different story for the bond market, as they potentially will be punishing the Fed for all of this massive printing. And like I said in the beginning of the show, well, maybe that's my fantasy or how I would write the script. So for now, we believe that the bond market will stabilize here and begin to get a rally. We're going to look for a bounce up to this 175 to 176 area, and then fail. So that is a look at the bond market. In a moment, we'll take a look at the stock market. Here's a little bit of a reminder. I will be on vacation next week. Once a quarter, I just take a break and I don't do any videos, so there won't be any market week. And for our members, there won't be any videos for the next week, and then I'll be back the following week with everything back as usual. For all of our members, there is no change as far as everything else goes. Matt and Arvi are still there. I'll still be doing some analysis, And for those of you that write me emails, I just might be a little slower getting back to you. So not much changed except that there will be no videos for the next week. So now let's take a peek at the stock market. We'll look at SPX right here. And the S&P 500, you will notice that there are some changes in here. So when the S&P 500 was down over here, and I said momentum is still strong, we have to focus on that, I put in this resistance right over here, 31.43, the intermediate 78.6%. Well, at this point when they were over here, I had projected this to roll over right there. I thought it was a pretty high probability, and I did say that if they got through here and the cycle extended, it would then be another bullish cycle just like these, and the odds would be higher that we would pull back and then move to a higher high again. It now projects that way because I have to follow what the market's telling me. We have the rising slim ribbon in here, positive momentum through the resistance level, and then the likelihood of a pullback in here. Now, this level right over here is 30.45. This is 29.90. The middle of the slim ribbon is at about 30.80 if it gets support in there. So there's only 3 or 4 days. This is the 15th day of cycles that run 16 to 20 on average of about 18. So 3 or 4 day pullback and then up again. This 161.8 fib extension comes off of this cycle. This fib extension zone right over here, it's actually a target zone that I gave it no credit for, and I didn't put it in, comes off of this cycle right over here. So these levels right over here are about 32.07. This level here is 32.55, and this level here is at around 34.05. That would be a new high for the market if it got there. Of course, the NASDAQ did make an all-time high this week, and that has been the leader. Now, we have to see if the stock market can get there or not, but certainly with it getting through this level right over here, it changes my intermediate sum of the evidence through the 78.6 is significant. And that with all momentum still up, I still only look for minor declines, or now only look for them in cycles that have this type of a structure. So we'll be looking for a break in here, probably over 100 points in the next 3-4 days, and then another rally up over here into these zones on these fib extensions. That is, this scenario comes off of the strength and length of this cycle. We call these right-hand translations and positively configured cycle patterns, and the odds of a pullback and then surpassing that level again, just like this did and just like this did, are better than 70%, maybe better than 80%. So that's what we look for, a pullback and then a rally. 30.80, 30.45 are the reasonable targets on the downside, and then moving up over here. The risks will pick up significantly over here. We talked about middle of June through the early part of August is when the risk picks up, and the sum of the evidence based on the intermediate pattern suggests that this rally over here will be the last one of this upside move, and then you go into that correction. So good, strong market, a great information coming off of the slim ribbon, the confirmations down over here on the projection oscillator with the strength right in here, can't even get into the oversold area, all these positive signals. And for level 4 members, you can have this chart live right on your platform. Level 3 members do get the Slimulator rankings system, which has the regularly updated dynamic charts on there where you get them also, and you also get these charts in the stock index report daily and weekly. So very, very important information for you to have. All you have to do is become an AskSlim member, write Matt at AskSlim.com, and he can give you the information if you need it, or just go to AskSlim.com to the membership and then do sign up to get this kind of information. We bring an immense amount of information every single week. We share our analysis. We teach as much as we can. And all we want is to share our knowledge to you and for you to be able to raise your odds of success in these wild financial markets that we see right now. That's it for the week. I hope that you found all the information valuable. Please do go to the site and get the Slim Ribbon for the Thinkorswim platform. I will see you in 2 weeks in our videos. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. Well, I'm going to the city and I'm gonna do a steady show.